Ed Yardeni is here.
He is joining us now. He's president of Yardeni Research. Ed, after the ceasefire was announced, I think, last week, and it looked like at least a deceleration, you said the lows were in.
Yep.
And now this is unclear whether
unclear,
we're in a
ceasefire.
Ceasefire. You still think the lows are in?
Still, the March 30th low, I think, was it for this pullback. It turned out to be a correction for the NASDAQ, but not for the S&P 500. But, the earnings season is up ahead here, and I think it's going to confirm that the earnings story is remarkably resilient. The economy has been remarkably resilient. I mean, we've had some weak numbers, but I think a lot of that, I blame the weather. We had some pretty nasty weather in January and February.
And the weather in Congress?
And the weather in Congress, of course.
Because of the shutdown?
Yeah, you do a good job of reporting on that, of course. But all in all, I think the economy is going to handle this pretty well. And I'm actually impressed by the resilience of the financial markets. I mean, especially with the announcement of the blockade of the Iranian ports. The reaction
crazy.
so far has been pretty muted.
Who would have thought? I mean, who would have thought the headline would be, okay, we're going to blocked the Strait of Hormuz? Do people just not believe that's going to happen? Why is there, at this point, why is it a total shrug?
Well, I think we have some experience, even recent experience with these kind of events. Geopolitical crises tend to be buying opportunities, and we saw that last year when we had the whole tariff issue.
Mm-hmm.
We had a bear market in 2022, no recession, but it only lasted 9 months and turned out to be a great buying opportunity. So the problem, it's not really a problem, but everybody knows that geopolitical crises are buying opportunities. So when we get one, they're like, buying on the dip.
Yeah, we need to shake that conviction and make you think, well, this time it's not going to be.
Historically, it's worked.
We have a supply. I saw a map of how many tankers we have around filled with oil. So we have supply here, but the price is set globally. So we're going to feel it at the pump. There's no doubt.
Well, we're going to feel it at the pump, especially because some of these tankers that used to go to the Arabian Gulf are now coming to the United States to get oil. And I think that's why the West Texas Intermediate just recently has jumped above the Brent crude oil price.
Depending on the month, yeah.
Because we're sort of a very reliable source of oil. And so I won't be surprised if we, in fact, do see our exports increase maybe substantially over the next year or so. And that would be a positive for our oil industry for sure.
So where do you see actual inflation? We had inflation numbers on Friday. I keep pointing to core because that's what you're supposed to use because it's volatile. When we always make the joke, nobody eats food, no one drives. Obviously, inflation, the headline number is what we're paying. But the reason they separate it out is because on a monthly basis, it's volatile.
It is volatile, yeah.
So will we get to 5% core?
Well, I think we're going to see a higher core. I mean, the core...
Because it filters through.
I think, we've had this recent anomaly where in the past the CPI inflation rate used to be higher than the consumption deflator rate, which is what the Fed watches.
Right.
And now what we're seeing is the opposite. And the reason for that is rent inflation now is actually coming down substantially, and it's got a huge weight in the CPI, not so much in the so-called PCED deflator. So the Fed follows the PCED deflator, and we are going to see higher inflation, both headline and core. And I think it's more of a problem than the markets are actually anticipating. I think the bond market has been remarkably calm about it.